Matt, I want to tell you a story.
Shoot.
All right. A client once was telling me about the time she opened an email from her accountant. It was in late March. She had just gotten the kids to bed, poured a glass of wine for herself, and figured she'd just check her email one more time, which, first of all, is a terrible idea. Don't check your email one last time before going to bed. Here's what happened. She had a reply from her accountant that she owed $82,000. That wasn't her tax bill. That was what she still owed. She had to write a check for $82,000. How do you think she slept that night?
The way I sleep, on a pile of money with many beautiful ladies. Hey, this is Matt Robison. That last voice was Rainier Wolfcastle from The Simpsons, their Arnold Schwarzenegger knockoff. And the first voice you heard was, of course, Mike Morton here on 5 Minute Finance. This is the show where we boil things down to practical steps you can actually get done to feel great about your money and lighten the load. Life is busy. We got you. You know who life did not get that well is your client who got an $82,000 tax bill that she wasn't prepared for. At least she poured herself the wine first. That's always a good move. If you're going to read email before bed, which you should not, do some kind of drug. I think that's all I took away from that.
Hey, but to do it after you read the email. Have you ever gotten an $82,000 bill?
Yes. I've gone to college, for example, so sure. And I'm looking forward to getting many, many more of those as soon as my kids start going to college. But no, that is a bummer. Literally, Mike, I'm not making this up. I am not making this up. You and I were slightly delayed in starting this show because I just got off the phone with my tax preparer who was calling to tell me this is the amount you owe. It was way more than I had anticipated, like way more. And then I had to call my wife and explain that. And she asked me why. And I'm like, I don't want to talk about that either. So anyway, yes, I've had this experience. Thanks for bringing that up, man. You want to give me a nice paper cut? Pour some lemon juice on it?
Are you? Well, sure. I have a question for you.
Sure.
Are you going to have to use? Yeah, sure. Are you going to use your your 2026 soccer budget to pay your tax bill instead?
No. That's because you told me once upon a time to put that in another account for our family adventure money, or like, it's time to buy a new couch, like, for fun stuff that we want to do. But you're telling me this story for a reason, not just to like kick me while I'm down. You wanted to get into this issue today, which is like a very fine distinction that I'm not sure I understand. And just lay it out for me. What does this lead us into?
So Matt and I are recording this just before the end of tax season, so early April, but you won't hear it until the end of April, which is perfect timing for this because the setup here is there's a big difference between tax preparation, preparing your taxes, and tax strategy. All right. And tax preparation is what you've just gone through. It's gathering all the stuff, handing it to your accountant or using TurboTax and filing your taxes. It's looking in the rear view mirror. What happened last year and writing it all down. Tax strategy is looking forward out the windshield of the car. Where are we going? Okay. And how do we have a good plan so that we pay just the right amount of tax? Just enough tax, but not too much.
And if that isn't an intriguing enough topic for you, which it should be, because to me, preparation and planning are the same thing. So I'm going to need a little bit of help there and understanding like what that distinction leads you to. Hang on, because we're going to cover, as we usually do, our listener question, which is all about guilty spending. That's almost as intriguing as a few weeks ago when we did hidden assets. We also have our one thing of the week, a dinner conversation starter. I always look forward to those. And finally, our worth knowing of the week, which is all about getting scammed. I like conversation starters better than getting scammed. All right. So should we get to it? Should we get to the main discussion here about planning versus preparation?
Yeah, let's do it.
All right. So we started this all off with the story, your client, the sudden tax bill, and this is in service of your kind of retroactive scorecard versus your future planning. Why is this distinction so important?
Yeah, and I'll go back to what you said about the preparation. I never thought about that because we usually think the word preparation is I'm preparing, maybe to implement my strategy.
I just said my tax preparer,
exactly.
But he's preparing my taxes. He's not preparing for my future taxes. And that's different.
Correct.
It's so
yeah, so we use this word preparation, tax preparation, but you're preparing for last year's taxes. You're gathering all the stuff, and then he's preparing to file them, and then you file them. But that's a scorecard. So that's the way to think about it, right? Last year's taxes, you've just gone through it. You've filed your 2025 tax return. You've said, it's a scorecard. How was 2025? How much income did we have? What capital gains did we have? Maybe we exercised some stock options. Maybe we had to pull out some RMDs. Those are all income, items. And then you have your total income, and then you get taxed on that. You got deductions, which are great. We love deductions because it reduces your income. So it's a big scorecard. It's a complicated scorecard, but it's a scorecard for 2025. How well did all that go for you and your family? And what we want to do is look forward, of course, and strategize about 2026. Hey, how can we make 2026 just that little bit better when it comes to your taxes?
I guess the way I'll try to remember this in the future is kind of like preparation H. It says preparation in the name, but if you're using the preparation, you've already got the hemorrhoids. And so it's really retroactive. Preparation can be something that you do retroactively, just like your tax preparer. And I'm only saying this because I'm feeling a little salty with my tax preparer, who's actually genuinely excellent at his job. And I appreciate him. And I compensate him very fairly for the hard work that he does. Please don't mess with me, man. Please don't mess with me. But, he always says like, you guys are a little under withheld. And so I was giving that painful explanation, like game of telephone to my wife a few minutes ago. And she's like, oh, well, did he have any suggestions for how to fix that? And I was like, no,
yeah,
not really. He just says it's a problem. And it's like, oh, yeah, you might want to do something about that. It's like if you went into the doctor and it's like, hey, I've got this gleaming shard of metal sticking out from my torso. You might want to fix that. That seems bad.
You might want to fix that going forward.
Forward. Yeah. Don't have that next time you come in.
Don't do that next time.
All right. So,
wait. So you're under withheld. Matt? What does that mean that you're under withheld?
What do you mean? What does that mean? I ask the questions around here, sir. You answer the questions. What does it mean? It means that my withholding isn't enough, and there's a form somewhere, and I need to increase it somehow, maybe with math or like weightlifting.
Yeah, see, this is it. It's funny. It's funny because it's exactly true, and I run this all the time. It's like my tax person told me I was under withheld, but didn't tell me what to do about it.
This is true. And again, I'm not trying to diss my tax preparer at all. Please don't mess with my taxes next year. But this is a problem. And I think I kind of know the reason that like we are making, he told me, he's like, Matt, you earned more this year. And I'm like, oh, good. That's a good thing. And he's like, yeah, thing. But, so.
That's the thing about tax preparers, right? Tax filing accountants. They're great people, but they're just focused on the backwards looking. That's their job. All right. So let's get that straight. Like their job is to gather all the documents, to write everything in the correct boxes, to double check everything for you.
Yeah.
And to file accurate returns. Now there's two problems. Not only the one you've highlighted, which is, hey, I'm not getting a lot of like looking forward steps. But hey, at least they're, filling out the forms correctly. The other issue that you have to be careful of is you have to tell them everything. So I run into this problem all the time. It's like, oh, something was missing from a box on your tax form. That's maybe because you never told them, like you didn't get the right piece of paper. You didn't tell them like what happened, what you were doing, why an account changed or moved or whatever it was. So you got to be really thorough, which is unfortunate because you're just like, I'm already just spent hours gathering all the documents. Now I have to make sure it's actually all of them.
How do you then take kind of that experience and start answering the forward-looking questions? How do you turn that from preparation H into planning?
Yeah. Yeah. Well, first, I'll give you a 5-minute task here, which is good to lead into, what are we going to do kind of looking forward in 2026. And the 5-minute task is pull out your 2025 return and find your marginal tax bracket.
Okay.
Okay. Now, your marginal tax bracket, we live in a progressive tax situation. So the first dollars you make are only taxed at 10 or 12%. Then the next dollars you make are at 15 or 24%. And then finally 35 and 37%. As you make more money, they are taxed at progressively higher rates. Okay. As you make more money, the money is taxed at higher rates. All right. So what you want to do is find the next dollar. Your marginal tax rate is whatever the next dollar you make. Hey, I made 150,000. So the 150,000 plus $1 is going to be taxed at 24 cents on the dollar. 24%. That's your marginal rate. If you make 500 grand, it's going to be 35%. That next dollar you make is going to be taxed at 35%. And it's important to know your marginal tax bracket when doing planning for 2026.
Got it. And just to make this distinction super clear, because it wasn't always to me in my life, when you enter a new tax bracket, if you go over the line from 24% to 35%, it's not like the 35% applies to all the dollars you made. It only applies to every dollar that's over that line. So if it's,
that's right.
Yeah. So like, let's just, for a round number, let's just say it's at 200,000, then it's 200,001, 200,002. All of those are getting the 35%. Everything underneath that is still getting the 24%.
Not even everything underneath, right?
No, right.
A chunk of it's getting 24, and then another chunk's getting 12, and another chunk's getting 10. So you got it exactly right. So your average, so I'll just throw this out. Average tax bracket, your marginal tax bracket will be 24%, but your average tax, which is the total tax you paid divided by your total income, will be closer to 15%.
Right.
Even though your next dollar's at 24. Okay.
So tell me then, okay, so let's say I do that 5-minute exercise. That truly is a 5-minute task. So how do I then use that information? What does that tell me?
So that's going to help you make decisions on what to do with your money. One of the simple ones, I'll just jump ahead, is should we contribute to a traditional IRA or a Roth IRA? Okay. Or a traditional 401k or Roth 401k. Remember, you go back and listen to the previous episodes. It's when you get taxed, either taxed on the way in or taxed on the way out, traditional versus Roth. If you're lower than 24%, if you're only paying 12 cents on the dollar, 12% tax bracket, throw money into a tax-free forever account, Roth. Pay 12% now, and then that money grows tax-free forever. This is my great 20-year-old and 30-year-old listeners out there. You're in the 12%, 24% tax bracket. Use Roth accounts. Hey, Mike, I'm now in the 35%, 37% tax bracket. Use a traditional account. You're saving 35 cents on the dollar. So there's where your marginal tax bracket helps you figure out where I should be saving money.
Okay, so the types of accounts you use, when you pay your taxes, anything else like?
Yeah. Tons of different things. So this is strategy looking forward is about understanding where all your income is coming from. And you can just think about it and write it down on a sheet of paper. It's going to be 4 to 8 buckets of money. It's your W-2 job. It's your business income. It's your rental property that's giving you income. It's your RSUs that are vesting. It's your ISOs and SOs, stock options, that you may decide to exercise. Okay. It's your ordinary dividends, your qualified dividends. It's your interest and your capital gains. All right, I just rattled off like 8 different things. These are all very easy to find on your tax form, but they're also things you know about. Like, oh yeah, that's I've got income and a rental property, and I got stock options that I know about. So you want to be strategic where you can. That's what you're going to get taxed on in 2026. But so be strategic where you can about when you have decisions. Now your W-2 income, you might not have a lot of decisions. Like I just get paid every 2 weeks. All right, no problem. Exercising your stock options. Oh, I could decide when to do that.
I see.
So you want to make a smart choice. So this is where the strategy looking forward out the windshield is how these things are playing with each other and making smart decisions where you can about when to take money. Another one is inherited IRAs. You get to decide there's required distributions but you could do more than that. Should you do more than that? This is where you have to have a plan looking forward. I got 8 different sources of income. Some of them just come in every 2 weeks, but other ones I get to decide when they happen. You need a coordinated plan in order to smooth out your taxes and pay just the right amount of tax.
I think I know the answer to this, but sometimes I'm wrong about stuff like this, like, how to increase my withholding. Should you do this right after you send in your taxes? And the reason I ask is the main source of irritation for us about having to file for an extension this year is we had a to-do item that we were just really jonesing to get off our list. Like, we wanted to be done. We wanted to send the check or whatever it is, have our return done. Now we have to do 2 steps. And so there's always a lull after we are done with our taxes, where we do not want to think about anything financial for like a month or 2 at least. Is there like a reason to take the experience right after you're done with your tax prep and flow into some decision points immediately for your upcoming year?
Yeah, I think you could take it one of 2 ways here. If you've got some momentum and you're kind of thinking about it and you just gathered a bunch of documents, you reviewed all your accounts, that's a great time to just, have a piece of paper and say, what's the 2026 plan? Where's income coming from? Anything I need to strategize about when to recognize income or what deductions I can take. So that's, keeping the momentum going, right? Because you've just done some work. In your case, you're like, no, I don't want to even think about this. So maybe you take a break. You could do it beforehand. Hey, in February and March of next year, that's when I'm gathering all the documents. Maybe that's a good time to kind of think about the 2026 plan. I would not leave it too late. I would do it in the first half of the year because there's a lot of things you want to think about.
What's the difference between the kind of planning that you're suggesting here and the long-term planning that you always talk about? I mean, if you have a leitmotif that runs through this show and your work, it's have a plan. And you're constantly talking about, let's have a plan for the next 5 or 10 years, buckets, what's kind of immediate need, what's longer term need. What's the interaction between this exercise, the 5-minute task out of today, taking the information you just got out of your tax prep, and that longer term planning process?
Yeah, that's a great question. I would say we do a lot of longer term planning to come up with overall strategies, and then we execute those year to year. And that's how they interact with each other. So let me take the stock options as an example. Hey, I've got vesting stock options. I got NSOs, ISOs, RSUs. We talked about that in a previous episode. You want to have a multi-year plan, because they have different tax implications. You hope to be at your job for a while. Hopefully the company is growing. You need a multi-year plan. And then in any individual year, you execute, not only just like routinely execute that, you revisit it and then make a smart decision for that year. How many ISOs am I going to exercise? It's based on the stock price. We have an overarching plan over the next 4 years, but based on today's stock price, what are we doing? Another one is RMDs, inherited IRAs. You got 10 years to empty it. And so we think like, hey, let's spread it out kind of evenly over 10 years. That smooths out the taxes. It doesn't bump me into the 35% tax bracket. So I'm going to take a 1/10 every year. That's the overall plan. And then you execute that plan, and any given year, you'd be like, oh man, I just had I'm switching jobs and it's a sales job. I'm really going to make less this year because my commissions are building up for next year. So I'm going to make less money this year. Great. So maybe we, alter the plan slightly. So we have these overarching strategy over multi-years, and then we just have to dial it in each individual year.
All right. Well, I mean, I think I get it. I think I get the overall picture. What have we missed? Like what points should people bear in mind, or how should they go about operationalizing this?
Yeah. I think, it's a little challenging because we mentioned a whole bunch of different things that are fairly complicated, and our list in the show notes is, got even more. So I'm not going to kind of go through all of those. It'd be too complicated. But you just want to have a plan for your situation. I've mentioned a number of things. I would do this, Matt, to answer your question. 2025, right before tax filing next year, because you're listening to this, at the end of April. Check your HSAs, check your IRAs, make sure they're topped up. All right. So make sure if you have an HSA, make sure you've topped that up. If you've got IRA contributions, make sure you top those up for the year. And then during the year, charitable giving is one strategy for reducing income. If you get some bonus income or something like that. Here's what I would do as a 5-minute task. We'll wrap this up. We'll leave a bunch more stuff in the show notes about this. 5-minute task, Matt. And I'm going to do this year, and I would encourage you as well. It's fun. Take your tax return, redact your personal information, so black it out, and then feed that into AI and ask it for strategies for this year, for 2026. See what it comes up with.
Interesting. Do you trust anything it says? Like, what if it tells me to invest in herring?
So just like everything else with AI, it lies all the time. So definitely do not trust it. But I would use it for a direction. Absolutely.
Like
so
a
if it
starting
gives you,
point.
Gives you 4 ideas. Hey, I would recommend you look at, donor advised funds, or I noticed your HSA wasn't topped up, or I noticed you had a lot of taxable dividends. You should look for more qualified dividends. Then I would use that as a direction. Be like, all right, what does that mean? Well, what could I do? And then start digging into it.
Got it. All right. Anything else?
Yeah. Lastly, I'm going to go back to your very first item. My accountant told me
Preparation H.
No, not to,
SNL did a whole skit about flaming hot Preparation H. That's what this whole thing sounds like to me. But go on.
Maybe we should just watch that instead.
We have a title for today's episode.
Exactly, flaming hot. Your accountant said, "Hey, you're under withheld. You should figure that out."
Yeah. Yeah.
And this is the biggest problem. This is, and I don't have a solution, unfortunately, but this is a big problem, is that accountants and CPAs and filing tax returns, that's what they do and they're great at it. But when you have a tax question like today, hey, or you just got AI to give you some suggestions. You're like, this is great. Who can I actually go to make sure this is real? That's a hard question to answer. People ask me that all the time. And usually your accountant, your CPA is not answering those questions. And so it is a challenge to find who's going to be there, to do that. Financial advisors, I think, are probably the best place to be looking for these kind of strategies, for advice. But it's hard. So I just, I don't have a great solution there, but I empathize with the problem of like, hey, I was told these things, but I'm not really getting help.
I empathize with my own problems too. Okay, and on that note, let's get on to our listener question. As always, I'd like to remind you that if you're a client of Mike's, just email him. Email works still, although I'm sure that AI will come up with something better in like 5 minutes. But for now, email him your question, get a custom response just for you. If you'd like to hear his thoughts on a question and you do not fit in that category, you can email the show, pod@mortonfa.com. Today's question from a listener. We've worked really hard to build a good financial life, but I still feel guilty when we spend money on things. I'm getting a sizable tax refund. How can I spend it without feeling bad?
Well, it is interesting. We definitely try to align, your resources, your time, energy, attention, and your money with what's important to you. If it's aligned with your values, I think you wouldn't feel guilty.
Yeah.
You wouldn't feel bad. Okay. So I think that's the first question I would ask is, okay, notice last time I spent money, you said, I feel guilty when I spend money on things.
What things?
So I would notice, how, what did I spend money on and what did I feel guilty about? Okay. A lot of what I do, Matt, is build awareness, right, on where your resources are going. And there's a big power in that. All right. So I would spend a little bit of time on that. What made you feel bad? Would you spend, and non-judgmental as much as possible, non-judgmental. Hey, just notice that I felt this way when I did this thing. And then how do you want it to be in the future? What is it that you need instead?
On that, I want to turn to our one thing, but I got to say, our worth knowing is more of a bummer. Our one thing is more of an upper. So
all right,
you choose.
Switch it up.
Which one should we do first?
We'll do the worth knowing. It's a fast one. Yeah.
Here we go. All right. So you've got a worth knowing for us. And this really is worth knowing, but I kind of wish I didn't know this.
Yeah, it's all about scams. There's a bunch of stats, but over 1 million identity theft complaints per year, in the last couple of years, and credit card fraud is like just crazy. Here's the thing, this is just a PSA. Fraud and scams are getting crazy good. Okay, anybody, myself, Matt, anybody listening can easily think that these things are real. I mean, it's crazy how good they are. So here's my number one tip. There's a million different tips and stuff, but here's mine. Number one, if you're ever reached out to by something and it sounds totally legit, like, oh, you gotta do this thing. Okay. If you are reached out to, hang up if you're on the phone, or don't click the link if it's like something coming in, text or email. Go to the website. Okay, just open up a new browser window, type in the website, get the number, call them back on the official number, or email them on the official site, or log in on the official site, or whatever it is. If you are being reached out to, do not click the link, do not answer, hang up, and then go back to the official site where they said you had to do something.
It is so easy. So many intelligent people I know have just, it's just so easy. They're getting crazy good. And I think you're saying this not to bum people out, but it's very real. And, if this does happen to you, and it's going to happen to all of us eventually. So, just get used to it.
Oh, absolutely.
You have some so you can go to where? identitytheft.gov. Yep. What else?
Annual credit report. We'll put them in the show notes. A bunch of links. There's a million things you can do, but that's my number one tip, is what I've already said. If you get reached out to, like Matt was, just then set the official, email, go to the official website, call it, the number that's listed publicly. Don't just start handing information.
Yeah. And I will say, password managers are getting pretty good at this. Even the preset passwords on web browsers are getting pretty good at this. They will tell you which of your passwords have been compromised or are at risk, and that's a very helpful one for fraud prevention as well. All right, should we lighten things up with our concluding one thing?
Let's do it.
Here we go. All right, this one's from you as well.
All right, Matt, you ever ask your kids, how was your day?
No. I don't expect anything out of them. No, I've done some version of that. Tell me what happened in school today. And they're like,
nothing,
Dad. I just don't.
Tonight at the dinner table, ask a totally different kind of question. If you could transport yourself anywhere in the world right now, where would you go? Just something out of left field, man. Get them engaged, get something happening. It's fun.
My kids would answer that question with somewhere my parents wouldn't ask me dumb questions. But all joking aside, we do a version of this where you ever watched the show Whose Line Is It Anyway? They do improv games. We actually borrow improv games. We play improv games at dinner. And it leads to some pretty good results.
Oh, I'm coming to your house for dinner.
Yeah, we have a good time. Very, very creative. All joking aside, we manage it. We manage to say all kinds of inappropriate things at dinner, which leads to nearly choking, which is also
maybe not while you're eating.
Exactly. Yeah. Some of these we should save. All right. I think we have successfully gotten into hemorrhoid cream, ribald jokes, and scams. What else we can cover today? I don't know. For Mike, I'm Matt. We'll see you next time.
Thanks, Matt. Thanks for joining us on 5 Minute Finance. If you like what you heard, please subscribe to and rate the podcast. It makes a huge difference for my show. You want more? Find Morton FA on Substack. If you have a comment or question, please email pod@mortonfa.com. Until next time, thanks for tuning in. This recording is for informational purposes only and should not be considered for investment advice. Opinions expressed are as of the date of recording. Such opinions are subject to change. I cannot guarantee the accuracy or completeness of the data presented here.